Hi there, I'm Adrian Alisie and I'm a certified public accountant practicing in the Villages community in Central Florida. This series of short videos cover key taxation concepts tailored specifically for retirees. My goal is to present these topics in a clear way so you'll understand them and be able to make informed decisions for your unique situation. Today's topic is the One Big Beautiful Bill signed into law by President Trump on July 4, 2025. The bill introduces several significant tax changes impacting retirees. First change we are covering, which might be the most important one of this bill, is that seniors aged 65 or older are now eligible for an additional $6,000 bonus deduction on top of their base deduction and the supplemental deduction. This is known as an above-the-line deduction and may be claimed whether the filer chooses to an itemized deduction or the standard deduction. The new provision will significantly reduce the taxes paid by some retirees. To better understand this concept, let's review the next illustration. Please note that during this discussion, we will use the term married filing jointly and couples interchangeably. Now, as you can see, the base standard deduction for 2025 is $15,750 for singles and $31,500 for married filing jointly. Also, if you are over 65, we add the additional standard deduction of $2,000 for singles or $3,200 for couples. And if your income is below $75,000 for singles and $150,000 for couples, then we also add the $6,000 bonus deduction per filer. Now, adding it all up, the total standard deduction amounts to $23,750 for singles, $39,100 for couples with one spouse under 65 and one over 65, and $46,700 for couples with both spouses over 65. As noted above, the phase-out for the bonus deduction starts at $75,000 of the modified adjusted gross income for singles and $150,000 for couples, and it is fully phased out at $175,000 for singles and $250,000 for couples. The temporary bonus will expire after the 2028 tax year. Second change to be discussed today includes two provisions that may impact working seniors, such as pre-retirees or partially retired. Please see the next illustration for additional clarity. The no tax on overtime provision provides a deduction on federal income tax return up to $12,500 for singles and $25,000 for couples for wages earned from paid overtime work. Please keep in mind that the deduction applies to the half portion of the time and a half pay, not the entire overtime amount. This deduction begins to phase out starting at $150,000 for singles and $300,000 for couples. Similarly, the no tax on tips provision provides a deduction on federal tax return on tips earned up to $25,000 for both single filers as well as couples. This deduction begins to phase out starting at $300,000 for both singles and couples. To further clarify, for no tax on tips, the $25,000 deduction limit applies per tax return, not per person. Also, both not tax on overtime and no tax on tips are federal income tax deduction, not full tax exclusions. The third change covered today is that interest on loans used to purchase new cars for personal use can now be deducted up to $10,000. To qualify, the vehicle must have a gross vehicle weight rating of under 14,000 pounds and have its final assembly in the United States, which can be verified through the Vehicle Identification Number, which is the VIN. This deduction is applicable to both itemized and standard deduction filers and starts to phase out for modified adjusted gross income over $100,000 for single and $200,000 for couples. The fourth and the last point we are discussing today, and we are presenting in the next illustrations, is that as part of the One Big Beautiful Bill, several key provisions from the 2017 Tax Cuts and Jobs Act have been transitioned from temporary to permanent status. This includes the current tax rates and bracket structure, which would be the tax rate currently in use, such as 10%, 12%, 22%, and so on. Next, the increased standard deduction, which nearly doubled in 2017 and have been adjusted for inflation in subsequent years. And third, the $750,000 limit on mortgage interest applicable to the standard deduction for primary and secondary homes. Please note that there are additional provisions in the One Big Beautiful Bill which were not discussed in this video, as they are either not being implemented in 2025 or have limited or no impact on retirees. We will revisit these topics, and if they become relevant, we will include them in our future videos. Now, this is it for today. Thank you for joining me, and I look forward to sharing more insights on retirement taxation in our future videos.